welcome back to another episode. This week, we're going to dive a little bit deeper into our bank statement loans and niche down into 1099 and career professionals. We have Tyson back with Lensure. Tyson, thanks for being here. We're going to talk about the 1099s first and how we can help you build your wealth through real estate, even if you are paid as a 1099.
In terms of our underwriting practices and our perspective, we're going to look at that 1099 loan program in almost the exact same way we would a bank statement program. Let's take the numbers off of the 1099 instead of looking at deposits in a bank statement. We'll apply ratio to that, and that is our income. As simple as that.
If you watch the episode on the bank statement loans, then you'll kind of be a little bit familiar with that. If you haven't, I will drop a link to that in the comments so that you can check that one out as well. You typically see, using this.
Yeah, absolutely. I'd say the most common people who are using this are those who are receiving a pretty hefty amount on their 1099s. First, I guess, class of workers that comes to mind is realtors. Limited to them. I brought in docs for a painter just last night, where all of his income is 1099. He makes it pretty simple for us because I think the perk to the 1099 as opposed to the bank statement program is the 1099 is just income. When spreading a bank statement, there can be questions about what deposits are income and what deposits aren't income. Whereas with the 1099, pretty simply, hey, the number on the 1099 is what income is, and that's pretty. So if you're a self-employed individual who has a 1099, and that represents really your entire source of income, there's not side pieces that are being deposited to a bank statement. This is the perfect program for you.
What would we need from that?
Yeah, absolutely. So pretty simple. Last 2 years of 1099s. So we have that documentation, and then I'm also looking to get what's called a self-employment questionnaire. So I'll again come back to our bank statement episode where I talk depth. I'll reintroduce it here. Every business venture has expenses. We all know that. And instead of hitting our 1099 borrowers with a fixed expense ratio or a pendulum expense ratio based off what kind of business they run, I'm going to ask them about it. And so we have every borrower who does this loan program fill out about a 10-question questionnaire that goes into detailed expenses. The more detailed that the borrower can be when they fill that out, the better it is for us, because that's going to help us dial in exactly what they're putting back into their business. To use the example of a realtor, I'd expect to see things about driving expenses, maybe some marketing material. But ultimately, there's not a ton of expenses. We're just looking to be pretty detailed in filling that out. And then on top of that, that's really what we need for income. You could expect to provide other documentation that you would when applying for a loan, asset statements, a credit report, and an application, and we can run with it.
So, are any bank statements needed, or is it verify assets?
Just to verify assets. We do not need
Okay.
bank statements to verify the 1099 income.
Awesome. So, how long would you say that these take to close? That's always a question that everybody asks, everybody wants to know. So, tell us about that.
Yeah, absolutely. Our standard turn times are 30 days or less. So really, we want to push these as fast as we can. This is conceptually a fairly simple underwriting process because we take the 1099 income average, we apply an expense ratio, and then we have income. So conceptually be pretty easy. There's not a long period of delay while we're spreading bank statements out. Than 30 days is pretty typical turn times.
Is there any kind of stories that you felt like were pretty impactful and you really helped clients out through this product that you would want to share?
Well, I'll tell you about the one that we're bringing in right now, where the 1099 is making a big impact. This borrower had approval from another lender, and when it got to the point of the closing table, that lender to their doors, which was shocking and crazy to me that they now can't get a loan. So they went to another. They went to another lender who does a banker and a broker, meaning they can do their own loans and they can also broker loans out. And this lender's in-house 1099 program requires that they have another stream of income, and this borrower doesn't. He's a painter and he has very good just on his 1099s. And so he called, well, the loan officer called me, and we had a conversation about it. And we are going to cram it in to try and turn this one around as quickly as possible because he was supposed to be in his new home 3 weeks ago. And so I think that's the most immediate one that comes to mind. Really, that will work for both borrowers that are in that kind of a time crunch, and also borrowers who are shopping and can't get approval conventionally because they may write more off on taxes, or there may be complications with filing taxes. It's very versatile. We want to be pretty aggressive with it.
You don't have to have a property in mind or your eyes on a specific property in order to start this conversation. If you're a 1099, you're just not sure, but you would like to purchase a home, that's a great time to reach out to me and let's start the conversation. Let's start to collect some documents and figure out if it's a good fit or if there's a better way to do it. And then you'll know, okay, this is my budget. This is what I can qualify for, and we can really kind of lay that out so that you and your family can find that perfect home. One that I didn't talk about is this, can this be used for any other property type, like a duplex or an investment property or anything like that, or is it strictly for owner occupied?
Great question. Thank you. It can be used for any of the above. So I can use it if you're purchasing a non-owner occupied. It's a duplex, a condo, single family. It was dialed down to the income type, identifying what it is that you make.
So this is another way that we can use a different solution to help you achieve that wealth through real estate. This is another way we can do that. So that's why I take a holistic approach, and we want to make sure we're maximizing your purchase and dialing it into the right solution for you because everybody is different. And honestly, every property is different. So we want to make sure that we're identifying the right solution for that particular property at that point in time for your family that fits your goals, down the road. Anything else you would want to comment on before we move to career professionals?
On the 1099, I think we covered it.
So, the career professionals definitely want to talk about this. This is really cool. So, let's start off with what is it?
Absolutely. So this is a program that I have not seen at any other lender anywhere. Conceptually, the idea is a very common sense approach to lending for borrowers who have not been self-employed for 2 full years. Oftentimes, if you're a borrower who has pivoted from a W-2 salaried position to being self-employed, you did it for a reason, whether that was for more flexibility, to industry where you felt more passion, or you wanted to make more money. Typically, there's a good, compelling reason for that. And this program came about because we didn't want to have to shut the door on borrowers who didn't have that 2-year history of being self-employed.
It's so common. It comes up all the time.
We see it all the time. I think there's absolutely a need for it. It is extremely niche and very unique. Going to be good for borrowers who are in the same line of work that they were prior to the change. That's kind of what we're basing it on. That we have a continuance of similar type of industry or income. And so, actually, the easiest way to kind of help connect this is with stories, and hopefully help the viewer a feel for what that looks like. Um, with kind of just the genesis of how this program came about, and it was doctors. And so we found a need in the market for loan to doctors. And ultimately, where it came about is you have these doctors who have studied for years. They've gone into residency where they were a W-2 employee. When they graduated residency, in some cases, they signed a 1099 contract and employed and can't get a loan. And whereas like that, to broaden it from the doctors, this now applies to your CPAs, your CRNAs, dentists, really people who has signed a 1099 contract with guaranteed minimums spelled out in that contract. Even though they're self-employed, we will lend to that borrower with as little as one paycheck on the new schedule, which is insane. It's amazing. So that is obviously kind of the risky way to do it because I have a contract that says, "Oh, we're guaranteed to make X." Okay, guaranteed to make it, then we're good. And kind of to tell more stories, fairly recently for a dentist who bought into an existing company, and so he was in dental sales for a handful of years as a W-2 employee, making a really good income. And he met three owners of a company. He lived in Ohio, borrower did, and he moved to California. For the first year, in lieu of paying a massive sum into the business, he worked as a W-2 employee and took a pretty severe pay cut to learn this new company's business model. And then they gave him an ownership share, and he was now a self-employed individual. So what we saw from an underwriting perspective was an average of call it $200,000 a year for 2 years, a steep drop to about $90,000 a year, and then a steep increase back up to $250,000, $300,000 a year that he was expected to make. Doing it on a 1 month turn time, we asked for about 4 months of history. We got 4 months of bank statements and spread them with our bank statement technology to essentially look and see what he was making. We came back to the contract, and we were able to approve him for his first home that he had ever purchased in California, with 20%. And so he had the ability to get into the home with 4 months of self-employment as a new owner of a business that was already existing. Similar to that, we had another loan that we did for a CPA. And CPA, again, for 2 years as a W-2, and he went out and purchased an accounting firm. He owned it for about 3 months and then approached us about purchasing his first home. We statements for the 3 months that he had owned it. We got prior financials for the company that he now owned, and then we got his W-2s, and we were able to underwrite that and get him. BTI came in at something stupid. It was like 16%, and he was making a stupid amount of money, and he could absolutely afford the property. The only thing that didn't work for him was that he hadn't been self-employed for 2 years. Otherwise, actually, it's a no-brainer conventionally to get that loan done. The theme, and I've got a couple more, but the theme here that I really want to cement is these are borrowers who are in the same line of work, who are qualified, who realistically, the reason that they can't get into this new home is because I'm self-employed now. I don't want to years. It makes sense to give me a loan. In terms of timeline that I like to highlight, I'm based in Utah. I think this is something I would assume would be common around Texas, and really are going to be your truck drivers. And so we'll see all the time truck drivers who are driving as a double, and they decide, hey, if I go 1099, I can write more off and more money, so I'm going to become a 1099. And oftentimes these borrowers are working for the same company, driving the same truck on the same route, even if they're not, if they're in the same industry, it's something we'll entertain ultimately with borrowers like this. And so to broaden this a little bit, think nails, think restaurant owners, think truck drivers, my favorite one. Ultimately looking to see about 10 months of history with the schedule. But looking at it just from a broader point of view, if I have a borrower who's in the same line of work, who's well qualified with a good credit score, a solid down payment, why wouldn't I lend to him? Why would it make that happen? So the trigger is a loan that we've done, and another specific done is the nail tech. For this borrower, she worked for years in a salon as a W-2. She went out, took all of her clientele with her, was extremely successful, made more money than she ever had. We were able to get that loan done with 10 months of self-employment before she had even filed a tax return. So ultimately, it is a phenomenal program that can be extremely aggressive and get you into a house much sooner than what you think is possible.
Takeaways is the amount of flexibility. So, when you go to the bank, if you don't fit their box, we talked about this last time, they just kind of send you away and kind of hurt your feeling in the process. So, with this, the takeaway is like, what's needed? Because it's almost like a custom thing. It's like, well, what's the situation? And then we'll determine kind of what's needed. I think is really unique. So, I commend you guys out, and I'm happy to have you guys as a partner because I think it's great. How long does it take to close?
Absolutely. So again, the goal is a 30-day turn time. The expectation is that there will always be a good amount of question asking upfront. I say this is one that we do. That doesn't mean it's the only loan that we do. And so we'll always have questions, especially when we're going out on a limb like this. We want to make sure that we very much understand, hey, what does this loan look like? I know in some cases, when you're applying for a mortgage, an expectation for a pre-approval can be a couple of hours. With this specific program, I've seen it take as long as a week to get the deal pre-approved. But once that's done, what's beautiful about our process is this loan has been vetted and taken up to senior management. So there's no longer for us to ask questions and understand your loan later down the line. We can really move as soon as we have that pre-approval. And so once we have the pre-approval, it's simple to disclose, order the appraisal, and really run with it. It's a 30-day turn time, assuming we can turn conditions around and get them back. But I would definitely build in the expectation that upfront there will be a good amount of back and forth so that we can understand why this is a good loan for us to believe.
Knowing that up front is really helpful to be able to set the proper expectations for the client, that we know, hey, we're going to do kind of more work up front, and then it's hopefully going to be smooth sailing from here. How about property types?
An example, we had a borrower that we actually utilized this program for. We loved the borrower. We were able to get all the documentation that we needed. We had a phenomenal credit score. The property that he wanted to purchase was a unit that had been a condo. The association decided to dissolve, and it's being called a townhome. The problem with this is that it was an attached unit, and the insurance that we could get for our unit would not cover walls out. And what that means is if the unit next to him burned down, there's not an insurance company that would be paying for the unit that our borrower lived in. And we want to protect our investment, but B, I'd say more importantly, we want to protect our borrower from not being able to have insurance on the property. So what I would tell that we will do this on feasibly any property that we would normally lend on. This is not going to be exclusive to only single family residences or only condos. But every property is a little bit different, and that would be reviewed in its own vacuum, aside from the income that we use to qualify the loan.
Okay, so that kind of wraps things up for today. We talked about our 1099s and our career professionals. If you have any questions on that, or you want to explore a certain scenario, you want to check out if this is a good fit for you, I will share my QR code, has all my contact information on it. Thank you very much, Tyson, for being with us today. And
Thank
we'll hit
you.
you guys with the next episode. Thanks.
So long.